All right, ticker shockers, Dave here, and today we're talking about a tech giant that's been an absolute rocket ship in the AI era. But could even advanced micro devices, AMD, be cracking under pressure? This stock has seen a 20% plunge in less than a month. What's truly happening under the hood? The headlines have been buzzing, and not in a good way for AMD. After a fantastic 3-month rally that pushed shares near record highs, the momentum has completely stalled. We've seen the stock drop a sharp 10% in just a week and a whopping 20% in under a month. This downturn follows what some saw as a modest beat on revenue in their latest quarterly earnings, but investor optimism quickly evaporated. The core issue? Struggles within AMD's crucial AI-focused data center business. The competitive landscape is heating up fast. Rivals like Broadcom are posting record results in AI infrastructure, and new players, even Alibaba, are stepping into the AI chip arena. This, combined with some recent leadership changes at AMD, has fueled significant investor unease and highlighted potential execution risks. We even saw AMD shares drop over 6% in after-hours trading last Tuesday, slipping below $160 after that earnings report, and it ended last week at $150.80. So, who exactly is AMD? They're a global semiconductor powerhouse, designing high-performance x86 microprocessors, GPUs, data center processors, and custom chips for everything from your gaming console to massive data centers. Think brands like Ryzen for PCs, Radeon for graphics, and EPYC for servers. Their business is primarily split into computing and graphics, and enterprise, embedded, and semi-custom segments. Looking at the numbers, AMD reported a robust $25.78 billion in revenue for 2024, up almost 14% year-over-year. And analysts are optimistic, forecasting a significant jump in EPS to $4.94 for fiscal end. Year 2025. The biggest chunk of their revenue, almost 49%, comes from their data center segment. Client PCs are next at 27%. In terms of profitability, they maintain a healthy gross margin of 43.2% and an operating margin of 8.36%. Geographically, the US and China are their largest markets. Now, let's connect this news directly to AMD's bottom line. The reports point to struggles within its AI-focused data center business and increasing competitive pressures. This is critical because the data center segment is AMD's biggest, contributing a massive $12.58 billion last year, nearly 49% of their total revenue. If that segment struggles, the entire company feels it. So, how do we get to that number? Let's walk through the math. First, we're estimating a negative 7.5% revenue decline specifically in that data center segment for the next quarter, reflecting those intensifying competitive pressures and struggles. Now, here's the key part: operating leverage. As a semiconductor company, AMD invests heavily in R&D and chip design, meaning they have significant fixed costs. We're using an operating leverage multiplier of 2.0. This means for every 1% change in revenue, earnings change by roughly 2%. So that negative 7.5% segment hit, given its nearly 49% contribution, translates to an overall revenue impact of about negative 3.66% for the entire company. Multiply that by our 2.0 operating leverage, and we're looking at a negative 7.32% hit to their overall earnings. With a baseline EPS forecast of $4.94 for fiscal year 2025, that negative 7.32% translates to a projected 0.36 cents impact on their annual EPS. This 0.36 cents is our moderate impact scenario, and we're assigning a 60% probability to it, given the detailed concerns in the news. We also considered a minimal impact scenario, which would see a negative 0.12 cent, and a high impact scenario, where EPS could be hammered minus 60 cents. The market hasn't waited for these projections to play out. The news article itself highlights that AMD's stock has already plunged 20% in less than a month, including that significant 6% drop last Tuesday after their latest earnings. It closed last week at $150.80. So it's clear investors are already reacting, and swiftly, to these concerns. Considering the projected minus 36-cent hit to EPS in our most likely scenario, and the fact that AMD's stock has already shed 20% due to these very competitive pressures and struggles in its crucial AI-focused data center business, this is clearly bad news for AMD's immediate future. While the market has certainly reacted, the underlying challenges in a key growth segment suggest potential for continued headwinds. Given the significant competitive headwinds in their crucial data center AI segment, coupled with the existing sharp market reaction, my take on AMD right now is a cautious hold. While the long-term AI story for AMD is still incredibly compelling and their overall position is strong, the short-term struggles and potential for further downside make me hesitant to buy right now. But I wouldn't sell either, as they still have a lot of fight left. What do you think about AMD? Are you buying the dip or are you holding off? Let us know in the comments below. Don't forget to like this video and subscribe to Ticker Shock for more deep dives into the stocks moving your portfolio. Remember, this is not financial advice, and you should always do your own research before making any investment decisions. This show is for educational purposes only.